Hello and good morning and good afternoon to all of you. Thank you for joining us this morning. By way of introduction, my name is Prashant, and let me just share some slides to get us started. Just some housekeeping to make sure we're on track. Hopefully you can all see that. This is what the session is about today. Jointly presented by Sharesight and PocketSmith with our most amazing super user, Ruth. And yeah, we can learn all about how to build financial confidence from her. Just a housekeeping disclaimer. Nobody knows your personal situation. None of anything discussed today should be considered as any kind of personal advice. Please read the disclaimer and please consult with your accountant or advisor for any specific advice. Okay, what we'll cover today, we're just going through Ruth's framework for financial decision making, some real life case studies from her personal finance journey, how to use Sharesight and PocketSmith, and we'll have lots of time for Q&A. Okay, so with that, we'll start off a round of introductions. Like I mentioned, my name is Prashant. I work at Sharesight as the Chief Marketing Officer. Been here for over 7.5 years now. Been a fun run. And very core and deeply believe in this journey and the ability to educate everyone on this. With that, I'll hand it over to Jason.
Hi, thanks, Prashant. I'm Jason Leong. I'm the CEO and co-founder at PocketSmith, and I've been at PocketSmith for 17 years, which is how old we are. We're a personal finance platform with users in over 190 countries, and part of what I love is connecting with the people that we help and talking with other people like Prashant and Ruth about how to do cool stuff. Our customers are like you guys. We call you household CFOs, which means that you guys are responsible for your money, you strategize, you're always thinking ahead, and you're looking to learn. So it's good to meet you all.
Awesome. And I'm Ruth Henderson, and I run the Happy Saver blog and podcast, and I'm based in very stunning Central Otago, New Zealand, in a very small town called Alexandra. And haven't been at it quite as long as Jason, but I've been running the blog for about 9.5 years now. And it came about because I wanted to start investing and I wanted to manage our money better. And along my journey, I found the likes of PocketSmith, and then I found Sharesight, and just started patching things together. And as I was doing that, my husband Johnny, who helps me run the Happy Saver, he said, Ruth, you should start a blog and you should tell everybody else what you're learning, because my mind was just been constantly blown with new bits of information about personal finance. And I just started on this journey, started documenting it, and that's just helped me connect with hundreds and now thousands of people around New Zealand and in Australia and in other parts of the world too. And I just, my whole point of all this is just to help people engage with their money so that they can grow their wealth, and in whatever way that means for them, because everybody's quite different. And there's some pretty cool resources available to help people do that. So that's what I'm all about.
Hey, Prashant, you're muted, I think.
Yeah, sorry. All right. So just in terms of like interaction, please feel free to chat with each other, mingle amongst yourselves using the chat function. Say good day and say where you're located in the chat function. If you have specific questions, please type them into the Q&A. We'll get to as many as possible. Don't promise we can get to all of them, but just really as many as possible. So yeah, we should get started with this. So I think one of the most common questions that we saw that came through the registration forms and for Ruth, I think the most common one was how do you balance between paying down your mortgage and investing? So maybe we get started with that.
Okay, I'll give that a crack. It is a very common question, and I come at it probably slightly differently to other people. So pay off your mortgage or invest all boils back down to just budgeting and knowing how much money you're making, where that money is going. And I find a lot of people, we've wandered through life and we've ended up with a mortgage, and then and we've probably all had superannuation, or in New Zealand we've had KiwiSaver, so we're investing on the side over there. But a lot of people kind of forget that superannuation and KiwiSaver is investing. So they're paying down this mortgage, and then one day they might stumble across my blog, or they might stumble across something like Mr. Money Mustache, or the financial independence movement, and then learn more about investing. And then suddenly they get diverted from their original plan, which was to manage their money, pay into their retirement fund, and pay down their mortgage. And they get really sidetracked into investing. And those are the people that tend to pivot hard from doing one thing into doing something else. And so, and then they get involved in the math and they say, well, my mortgage rate is 5% and the return on investment could be 10%. Wouldn't I be better to put my money into an investment? And math does not trump behavior. And I think if you want to achieve financial success, behavior is the most key thing to do. So I encourage people to pay over the odds on your mortgage. So make a decent payment on your mortgage, set a time frame to have your mortgage paid off, pay into your retirement funds. And then if there's a gap, which is what PocketSmith is going to do for you, between what you're earning and what you're spending, and you can put some money towards investing, then do that. But be very mindful of what you're investing in, and just do a lot of research first on what you might invest in. Because I just talked to a lot of people who they decide, I've missed out on investing all these years, time in the market. They really feel that they've missed the ball, and they will kind of invest in anything that moves. And then they will get a little bit more education under their belt and think, oh, I shouldn't have bought XYZ share or ETF or whatever it might be. So they'll sell, etc. So long answer, Prashant, but that's me. Always got a lot to say. Focus, basically. Manage your money well, budget well, pay your mortgage well, and then if there's a gap, yes, you can look to invest that gap, but you've got to stick to the original plan, which was to get out of your mortgage debt. Yeah. Oh, you've muted yourself again, Prashant.
Sorry, I keep doing that. Anything else further to add to that, Jason? Do you have any personal preference?
It's it really does depend, I think. Depends on your goals, depends on how bullish you are. I really lean towards what Ruth is talking about too, because it is a high risk, and I'm old-fashioned. I'm a fan of demolishing that mortgage as quickly as possible, and that frees things up. But it really
Mm.
depends on where we're at with interest rates as well. Times are quite different during COVID. It's a chance for us to really pile into the mortgage, and yeah, so I think it is horses for courses, and also depends on the climate. But the best thing to do really is to speak to an advisor who can take a look at your mix of assets and debt, and then be able to give you a bit more of an accurate read on sort of how you're feeling about your risk, how quickly you want to pay down your mortgage. Some people are looking 5, 10 years, others are happy to look at 25. How big your mortgage is, that's a huge question as well. So yeah, I mean, definitely seek advice.
Yeah.
That's certainly where I'm coming from.
Yeah.
Mm.
And the important thing is, like, what I personally took away from Ruth's answer was, I'm definitely a maths kind of guy. But the problem with being a maths kind of guy is I could get into paralysis of analysis. And the important thing is to do something, and so that you keep moving your position forward. I think that's personal preferences. Ideally, you want to do a little bit of both, but yeah, I think 100% agree with what Ruth and Jason said. Totally risk averse as well, but at the same time, you do want to, capitalize on that growth story as well.
Mhm.
Okay, we've got another question coming in from John, who has asked, should I pay my mortgage or salary sacrifice into super?
Oh, coming back to what Jason said there about when you're getting into details like that, you kind of need to seek advice. But it just depends on what you're trying to achieve. And so maybe you are nearing retirement and you want to get mortgage free before retirement, then getting after your mortgage and paying into your superannuation fund at the same time makes sense, because otherwise, if you are not paying into your super enough, you're going to get to retirement age and there's not enough there to retire. So here in New Zealand, you can do a 3 or 4% allocation into your retirement fund, and your employer will match that. It's much higher in Australia. So you might choose to just do that and go after your house mortgage and then invest in another product outside of your superannuation fund. Um, it's all about forecasting as well, and like both of your products offer that ability to pull the levers, and you can play out the math, Prashant, you'll love that, that you can say, look, if I put more into my superannuation fund over here and less into my mortgage here, what will that look like in 5, 10, 15, 20, 30 years? And so just playing with scenarios like that will help you make a decision that the ideal is that you then stick to that decision that you do make.
Just a quick poll that's coming up. Thanks for that answer, Ruth. But yeah, we just launched a very quick poll just to see how many people here use PocketSmith or Sharesight. And one of the questions actually in the Q&A that came in was, I use PocketSmith, what is Sharesight? So Ruth, how do you answer that question personally?
As in, what is Sharesight? Yeah. So so I started investing. So I learned about this investing business and I wanted to get involved. And so I started buying an ETF fund, which is all well and good. I bought it and I could see that, I bought it in January, February, March, April, May, June, and July, and now I own this many units, and the total value is this, which is all well and good, but it's like, but did I make any money, or is that just, do I own, is it worth more simply because I put more in, etc.? And that was when I stumbled upon Sharesight, where you just enter every single trade that you make, and if there's dividends or distributions, they're automatically inputted. And then so along the way, I can see, like, I've put in this much, my capital gain is this much, my dividend growth is this much. And so it just told me black and white, yes, this investment works. Because I always had that concern in the early days when I was reading books like J.L. Collins, The Simple Path to Wealth, and the likes of that, and I was investing. But as the CEO, CFO of our household, it was kind of sitting on my shoulders like, holy moly, what if I've got this wrong? And I'd say to my husband, Johnny, sometimes, I think this is right. I think this is working. And it wasn't until I discovered your product that I'm like, heck yes, this is working. Yeah, do more. I'm on the right track. So that's what Sharesight is to me. It tells me in no uncertain terms whether I'm on the right track or the wrong track.
Yeah, thank you. Thank you. I actually, there was an interesting story I read just this morning, and I thought that was really relevant to this. Feel free to mock at it in the chat if you find it horrendous. But here goes the story. I'll anyway go for it. There was a guy searching for his keys, and he was looking for his keys, and a cop saw him and said, "What are you looking for?" He said, "I lost my keys here." And he kept looking for it. And then after about 10 minutes, the police officer asked him, "Are you sure you dropped it here?" He said, "No, I actually dropped it near my house." He said, "Then why are you looking for it here?" And he said, "Because this is where the light is." And so that's kind of how we go about. There's certain things that we look for where it's so obvious, but it's to uncover the places where you don't have the light. And in effect, what PocketSmith and Sharesight do is actually show light into both your spending and budgeting life as well as into your investing life. And that's how they come together in a really nice way.
Hmm.
Yeah, so that's my funny answer to what is Sharesight.
Yeah.
All right, we could get into some more questions. So I think it's a big one, actually. Why does the current financial system concentrate wealth and power, burdening the majority with debt and inflation? And what are ways individuals and families can escape?
Wow, that is quite the big question.
That's a
So
heavy one.
I've got thoughts. You go first, Jason.
Oh man, thanks. Let me have a look. Let me have a look at this question again. Okay, so oh, I mean, I think the concentration of wealth is in part certainly, in countries all over the world, we're looking at uh the well, the property market for one. It used to be that you buy a house to have a roof over your head, and now property is a commodity, and people can co-invest, cross-invest, and the scarcity drives up house prices, and that's a real challenge because the wealth disparity then rolls on where it used to be your house was maybe 3 times your annual income, if that sounds about right, the gearing of it, and now we're looking at maybe 7 to 9x. And so there is a generation of people who are profiting off capital gains. And like one perspective on it could be that we just haven't had good enough policies to protect people to, I guess, fulfill the social contract we've got for the generations to come by giving them an opportunity to both buy a house and a car and to live a full life without being saddled with debt, because then that debt becomes intergenerational. So that wealth divide is a massive concern, certainly for me. I think that's probably one of the biggest consequences of some poor policy making around property. So that's just one lens. I mean, there's so many different, but this is one that's very obvious and very painful that I can see.
And my take on that would be we can't, I as an individual cannot change so much of what I read about and see. And it's very stressful to think about on many levels. And so I always look at how I manage our finances. Johnny and I manage our finances. It's like, well, what is within our control? And that is what I focus on. So I'm always trying to, I call it government proof our finances, which is not a reflection on any particular government. It's just whoever's in government. And if they want to make changes and decisions and the likes of that, how can I best protect ourselves from that and have our money in the right places to cope with things like that? And so I'm always just looking on a very personal level. It's like, okay, what do we earn? What do we spend? Where are we allocating our money? Is there the ability for us to earn more money? How can we reduce expenses? And just looking at every factor personally, because if you spend any time watching the news, there's a whole chaotic world out there that I can't change, but I can do the right thing for my household, in my street and in my community, and I can make change personally and at a community level. That's how I think about it. Yeah.
Yeah, no, totally agree with the sentiment. But the system is the constraint that we have to live within, and yeah, whatever works. And
Yeah.
for your personal circumstances, that's all we have in our control. Of course, there's a broader societal question that we can all take up, but yeah, I think that's a much longer term change.
Yeah, I've just got one practical example I use as well. It's like I've got a daughter who's about to turn 18 and she wants to go to tertiary study. And so I'm hearing parents talking about, oh my gosh, they're going to university next year. Ah, money, how are we going to pay for this? And it's like years and years, 10 years ago, I thought it's probably, and she's got the opportunity one day to go to study if she wants to do. She doesn't have to do it, but how can I prepare for that? So for her, for every dollar that she's ever earned, she's put half of it into investments to earn money. And so one day, and that one day is now upon us, that's money that can be used to pay for her education. So I am always thinking ahead, what problems or opportunities or just life things are coming up that we can plan for now. So that's what I'm always encouraging other people to do as well.
Yeah, with that, I might just launch another little poll, which is related to financial goals. So, yeah, it's an important one. I think very much related to all the topics that we've covered. Whether you want to pay down debt or you want to plan for retirement, investing for the next generation, all of them. So there are all these competing priorities, and yeah, just I think tackle one by one. There was another question actually from Matt, who also said, I love the saying, behavior beats maths. Unfortunately, I'm a maths guy who has analysis paralysis. I totally empathize with you, Matt. I face the same problem, is all I can say, but I think you should go with what Ruth said. So
And
that's
just, I was talking to someone the other day who's a math head as well, and so as a result, they can never pick an investment. Well, no, they've narrowed things down. They've read enough of what I'm on about and found resources that they had narrowed it down, but they were instantly thinking $1 million invested, even though they had nothing right now. So it's like, well, stop, Matt, thinking $1 million invested and think 50. Can you make a call by the end of this day and invest $50 in that one thing you were thinking about, and then go and do it, make it happen, and then in a week, in a month, do it again. Put a calendar, like for math people, you like logic and certainty. So put a note in your calendar. So this time next week, I'm going to invest another $50, and on and on and on. And so when you just make steady progress and steady habits, and then you look back using Sharesight and PocketSmith and the likes of that to see that, you know, your investments are climbing or your debt is coming down, whatever it might be, then you're like, okay, that works, that works, that worked, and you'll do more of the same. So just start, but start tiny. And you know it's ridiculous, you know, if you're like using $10 on Sharesies or something like that. It's only a tiny amount, but it's the beginning of a good habit.
Yeah, I think I've read one of your I can't remember one of your blogs, I think on habits as well. So I think that's definitely a core part of things. Habit always trumps.
It's massive. Habit is absolutely massive. Yeah. If you think, oh, I will do that, you'll never get around to it. But if you put a note in the calendar, you will make sure it happens. Like for investing for Johnny and I, like, I think it's been probably about 10 solid years now, 20th of every single month for 10 solid years, we have invested money, you know? So, and that's built up over time.
I think people are probably quite afraid of that. You know, when we talk about building good habits around money management, it suddenly sounds like a chore, but really it's no different to setting aside time to mow your lawns or to go to the gym or go for a walk. It's just that this sitting down and looking at the numbers can be quite confronting, but it gets easier over time and just becomes second nature. So yeah, I love that we're talking about habits in this regard. It's very accessible, very attainable, and you can just start small.
Yeah. And Luke's just made a comment on the chat saying repetition breeds habit. So totally agree with that.
Yeah.
All right. Another question that came in was, how do you track property investments and total balance sheet?
I'm going to leave that one for you, Jason.
Let me have a look at that question. Is this important? Is a property that well, you is this in PocketSmith? If it is, then we can have. So we've got a net worth page that gives you a view of, I guess, your total assets and liabilities and the number that pops out on the other side. This number comes from the accounts that you link into PocketSmith, so you get a near real-time figure across all of your credit cards, your investments. If you're pulling stuff in from Sharesight, that goes in there as well as your cash accounts. When it comes to property, we don't yet have a live link to a property portfolio site. And we're across so many different countries, and it's probably easier given the price of your property hasn't changed that much. Not anymore. It's not like COVID days where every 5-6 days or so, everyone's refreshing their property prices on those websites. So it's actually okay to put in some of your larger assets manually into your net worth page. And just, again, as a part of a habit, revisit that maybe once a month and go in, and you can actually just pull in the values that you're seeing from a property website, and just keeping it in there just to get a sense for your total net worth. Remember, of course, that if you have a mortgage account, you can then link that live mortgage account to your asset to actually see what equity you have in that house.
Yeah. Yeah.
I
That's
probably can chip in 2 cents there. I think having a separate dashboard specifically for your investment property makes a ton of sense as well. And then you can link any interest you're paying or any repairs you're doing and the income coming in from rent and the likes of that. So it keeps it really, really distinct and separate. That makes a lot of sense. So otherwise, I talk to a lot of people who have an investment property, no clue of how that thing is actually performing. And a lot of people get a bit of a shock when they actually do run the numbers on investment properties and think and realize that they're not actually the fabulous investment they were always led to believe they were. So yeah.
I mean, it depends also on what kind of investment property it is, right? So if you're banking on capital gains, then it's a long-term play. But there's, of course, the the maintenance and everything else that goes into it. So we own 2 houses, and the place next door, which is, like a sister home to ours. When it came up for sale years ago, we decided to buy it. And we have it for our family and friends to stay over, but we also Airbnb it. So that is technically an investment property as well. And it's really important for us to track the ins and outs of it, just like a small business, really, and making sure that we've got the deductibles in there, tracked in PocketSmith. And so to Ruth's point, having a separate dashboard that isolates the cash movements in and out of that particular property. If you've got a number of different properties, you can actually set up a dashboard for each one, just to take a look at the performance of each individual property. Just keep checking in to make sure that you're not, forgetting or overspending or over capitalizing on a place.
Yep. Yeah. No, all really good answers. Thank you. Okay, so question from Steph. If I'm going to invest over the long term for my hopefully early retirement in one world index fund, what's the benefit in regularly checking something like Sharesight? Surely this just risks me wanting to tinker with it unnecessarily.
Good question. So once a month I buy an ETF, very similar to what she's buying. And then I send that trade to Sharesight and it updates my portfolio. And then on the other side, on the PocketSmith side, once a month, I check in on the first of every month to update my net worth. And so that's where I want to capture that investment, what's it worth today. And that way, then I can start looking back. Like it's, what are we today? The 4th, 5th, something like that. So the first of the month is my absolute favorite day of the month. And so I was looking to see how that investment was going. And then I was comparing it back with year to date. So from the start of the year, how's it been going? And then I was comparing it back to 1 year ago. How are we performing? So that's the benefit of doing it. I'm tracking my net worth because the whole point of this is to grow our wealth over time. Johnny and I are aiming to retire early. And so we have a number in mind that we're trying to reach with our invested money, which means that we'll be able to then quit our day job in effect. So you guys would have heard this many times. They say the best investors are those who never check their portfolio or who are dead. I'd rather be the former than the latter. So if it's of no material benefit for that person to check, well, yeah, don't check. But you do want to check in once in a while, maybe once a year, to see that your investments are actually performing the way you want them to perform. So, and hopefully if you're only checking once a year, you're like, crikey dicks, share markets, what have they been up to? This is amazing. Yeah.
Yep. Sorry. So I'll just go through one more question from Malcolm. Will you be showing simple samples of how Sharesight might help the do-it-yourself retired investor who has stumbled along for many years with some success, but still wants to improve knowledge and the results from investing, particularly in share and bond markets?
Is that asking me or you or?
Yeah, I think it's general. I can have a crack at that one. So we can link some videos and tutorials to this video. We may not have time to go through a detailed demo. We'll definitely show some sort of a basic demo along with this video.
Yeah, and that's the sort of thing in my blog, because I put out a blog every fortnight. I'm always actually, when it's relevant, linking to either PocketSmith or Sharesight because that's where it's showing my numbers. So I could write something specifically on how Sharesight works, but how I ended up wanting to use it was because I created my own spreadsheet. And but it never told me if it was making money. So my spreadsheet skills are, yeah, kind of average. So I would look at my balance each month and then I could see what we had put in that month and the likes of that, but it wasn't taking into account dividends, etc. So that's when I started using Sharesight with the free plan because when you got under 10 holdings, it's free. And so I just started popping my buys into there. And then when I got a distribution, I would pop that into there and just started gently tracking that. And I think that's the point with both PocketSmith and Sharesight. Like when you first open up your type of software, you'd be like, my God, where do I start with this? It's quite overwhelming. But I always say to people, for either of you, you start with a question. And so it's like, okay, if you have an ETF fund and you have been buying it consistently for 6 months, my question is, does this work? Am I making money? Am I going forwards or backwards? You ask it that. And it's the same with PocketSmith. It's like, when you first open, maybe you got 10 bank accounts, just link to one bank account and ask it a question. It's like, okay, so this is my main bank account where I fuel up the car, I buy the groceries. So ask it a question. It's like, I've put in all my transactions. How much am I spending on feeding my face each month? And then you can then say, okay, well, now I know I've spent X on food, but how much was at the supermarket and how much was at the local cafe or restaurant? How am I going to work that out? And then you just gently dig down and uncover those answers that you're looking for.
Yeah. Yeah. Sorry, Jason. Yes.
Oh yeah, no, I was just nodding. Ruth and I were talking earlier about like one of the best ways to work with PocketSmith, and I think for most of our viewers, if you're already PocketSmith customers, you know about the relatively steep learning curve, but the huge rewards. But if you're finding that it can be overwhelming, exactly as Ruth said, take it step by step, ask it one question, see how well it answers it for you, and then expand it into the other parts of your life.
Mm.
Yeah.
And just one other thing on that, with both Sharesight and PocketSmith, it can do so much, but it doesn't mean you have to know it all. And like I believe I use Sharesight quite simply, but it's perfect. It's exactly what I want it to do. When I've got another friend that I was chatting to the other day, oh my goodness, she's just like this super user to the point that I was telling her about my retirement fund, and I receive an email where she has inputted all my data into hers and sent me screenshots of all this information because she loves that detail. She knows your system inside and out, and she loves doing that, but that's not for me. I just want to know, is my superannuation fund performing how I want it to perform? So I remember in the early days of PocketSmith, because I get so many questions through my blog all the time, and a lot of them are related to that, I thought, right, I'm going to sit down, I'm going to learn the software inside and out. I aborted that mission. And now I simply, when people email me and they do have a question, I go and I find the answer to that one question and I answer that. So I probably know more than most, but for individual purposes, just don't overwhelm yourself. Just take it slow, take it easy, and just build on your knowledge over time. And also, when both of you guys send out emails with how-tos and like user guides and tutorials, and I'll always watch that sort of stuff because you always get something out of it. So that's another thing to keep on top of. Yeah, it's useful.
That's really good. I might just launch another little poll there, which is relevant to connecting your PocketSmith and Sharesight accounts. And I know, Ruth, you do that, and you see like one big dashboard, and that builds confidence, I assume. So coming to like the core question, how does that build confidence, and how does that help you?
So when I think of my PocketSmith, it's like I have to scroll across the screen. I have every widget going and adding new ones and taking them away. And then in the early days, when I got the hang of it and I wanted to talk to Johnny about our finances, I did the worst thing I could possibly do. It's like sitting down with somebody's spreadsheet, which they have spent years, creating, and you look at it and it's like French, who knows? So my PocketSmith dashboard, ton of information, but then I just created another dashboard, which was for Johnny. And I simply said to him back then, what do you want to know? And he said, I want to know how much we're worth, our net worth. I want to know how much we're making each month and how much we're spending each month. So that was just a couple of widgets, very clear, concise screen. And he had the questions that he had answered. And then in my screen, I've got all my investment information on that as a widget as well. So I'm forever sort of playing around with the investment side of things and it tallies it all up for me. So so it's quite interesting in our household, two quite different looks at things.
Mhm.
Yeah. But you could quiz me on anything and I could tell you our numbers. Yeah.
That's amazing.
Like the confidence part of it is, it's so key. That's really the reason why we founded the company. It's just before we had tools like this, we felt like we were flying blind. And that gets back to a good chunk of what Ruth was talking about with the spreadsheet. Yeah, but how actually am I performing? And the questions will differ. And like as the CEO of our company, I want to tell our viewers that I've gone through different phases of my life where I've used our product very differently as well. So it's actually okay to just take a step back and go, well, is this actually working for me? Do I need to reboot how I'm thinking about it? PocketSmith will do it for you, but just don't get into the pattern of maintaining a massive sort of budgeting platform with all of the information in it without the stuff that you need. It's okay to actually pare back and focus on the stuff that you're really looking at this particular stage in your life, or just for a period of it might be a project, might be a question you want to answer. It might be just, hey, let's create a forecast to take a look at what different water scenarios we have looking forward. We've got a question here about the rapidly changing economic landscape. Some of these things are really good to game out, because before I had an ability to create these projections and to go, right, where am I going to be, or where could I be? It was just a little bit more nerve-wracking. And the main thing for us to do with a budgeting tool is to resolve your anxiety, to give you a sense of control. And that's available in all different parts of it. So you can gain confidence by taking a look at the trends, for example. Is my spend on this particular thing creeping up, or are there spikes that I hadn't noticed? It's all there at your fingertips, and sometimes you just got to browse around to see what's in there. And the anomalies will jump out at you as well.
Mm. And just one last thing on that. Like, I know some people really love creating spreadsheets, but when I watch these people, they spend all their mental energy creating the data. They don't ever actually implement that data to change their life. And that's what both of your products do. So it's all, you've compiled all my data for me. Now I get to use it to plan the steps ahead. And that's just a game changer when you're thinking about money. It's kind of, you've gone from just looking at it, organizing it and counting it, to actually seeing what can that do for me. And with investing or budgeting, whether you got a little or a lot, it helps anybody anywhere. Like I did see something in the chat earlier. Somebody said, I hope to use PocketSmith one day, but I haven't got enough money yet to budget with. Kind of that's the time to start, because then when you start to zero in on what did we spend on groceries and petrol and power and stuff like that, and then you start to compare that with your income, then you start to make some changes, And then when you look forward, or when time goes on and then you look back a month, 6 months, a year to when you felt you had nothing, you had no money, and you're like, my goodness, look at the changes I've made, you know?
Mm.
So I don't know quite where I was going with that, but yeah, no, I know where I was
The
going with that
confidence
actually.
piece.
Yeah, confident. And so instead of just using spreadsheets to say I spent some money here, use PocketSmith and Sharesight to say, and this is now where I'm going to go with it, because I saw that when I spent, only $200 a week on groceries, that freed up an extra $50 I can now invest, in something that I can now track on Sharesight. So you build upon it, not just reflect on what's gone on before.
Yeah. And talking to some of our experienced customers, what they said was like by using tools like ours, the biggest change has been the conversation with their accountants. Earlier, the accountant used to spend 80% of their time just, okay, send me this, send me that. Whereas now, like you said, Ruth, it's all available. Now, okay, take it to the next step and say, okay, what can we do about this situation, and kind of link it to where we want to go with it. So yeah, that's a brilliant answer.
True. That gathering of data is so tedious and
Yeah.
it's such a huge problem to solve. And to your point, you can build a spreadsheet and gather the information. That's 90% of the work. So if you actually had it all sitting there, you could actually get into the process of looking at the information, and things like dashboards help bring that information to light a lot quicker. And it makes that, habit creating like you're motivated to create these habits because it's not so tedious. And
Yeah.
that's really what we're out to do, to save you time.
Because people will always be really great at budgeting for like a month, and then
Yeah.
the wheels fall off, because when you're budgeting that way, it's always out of date.
Yeah.
When you put the last zero on your spend, it's out of date, sort of thing. So yeah. And the other side of it as well, through my blog, I talk to a lot of people of all ranges of wealth. And the amount of people who have made all the money they're ever going to need, and they don't realize it, and they continue to try to earn income and make money. And I'm like, for what? You've made all the money you're ever going to need now. Look at it here. Be generous, spend it, enjoy it. Stop the accumulation, start the enjoyment of it. And that's what both of your products show people as well. Do that in line with the book Die with Zero by Bill Perkins. All this tracking and getting everything together. The whole point is to reach a tipping point where you can say factually, I have enough, and now I'm going to start to utilize this
Yeah.
money in whatever way I like. Yeah.
Okay, lots of questions here, so we should start getting through some of them. Helen says, hi, I'm a full-time trader and my hobby is the household CFO on PocketSmith. I would like to hear more about Sharesight's capability to interface with PocketSmith, particularly Sharesight's ability to manage data and derivatives, such as options and CFDs from platforms like IB, CMC, or IG. I have tried Sharesight, but struggle with it managing more active trading. Thanks. Okay, I'll take that question. Sorry, Helen, we don't support CFDs and derivatives as yet. We are constantly trying to add more asset classes. We've just about added the support for warrants now, so that's one step further. But yes, it's not something that we cater to at the moment, not for very active traders, but as far as long-term investing is concerned, we do support all asset classes. But yeah, we're constantly striving and working to adding more and more of these data feeds. So for example, one of the things we should be adding soon enough is support for Australian and Kiwi bonds. So that's something that we are actively going to be working on. But yeah, it's not there yet in terms of other derivatives like CFDs and so on. Okay, the next question from Doug. A few questions. How do I integrate Sharesight as an asset into PocketSmith? Two is I have SMSF managed on the CFS Edge platform. How can I get this added into Sharesight without doing manual imports or additions? I use Spaceship Invest. When will Sharesight have them as a broker so I don't have to add transactions manually? I'll go in the reverse order. I believe we do have Spaceship support, but let me confirm that for you. So it should be already available. Unfortunately, with Super, A lot of those things are manual. That's just the way it's been set up. And sorry, I forgot the first question. So yeah, there are still some quirks to manage within specific data feeds at this point. Yeah, PocketSmith and Sharesight integration. We've linked it in the chat notes as well, but we'll link it in the follow-up email and in the video. It's pretty straightforward. It's actually, I think, appears as a bank feed in PocketSmith, and you can connect Sharesight through the API, and it all gets nicely pulled in. So that should be pretty straightforward. Okay, Darren asks, what's the value of Sharesight if my investments are through a single platform like Kernel, InvestNow, Simplicity with their own tracking and performance metrics? I think that's similar to the question that you answered already, Ruth, which is that even as a single broker, you do get the depth and insight into your own portfolio by using Sharesight. I'm not very familiar with those specific platforms.
Yeah, I use it. I bring in my it's what have I got with it? Smart Investments and my KiwiSaver and Sharesies. Those are the three that I use on Sharesight. So the benefit is seeing everything in one place. And often providers don't give very good performance data and the likes of that, or they're comparing with unusual benchmarks and that sort of thing. So I just prefer to just see it in one place, basically. Yeah.
Yeah, thank you. Anonymous, I'm on an aggressive growth trajectory with high growth assets and a frugal lifestyle. Given the rapidly changing economic landscape, such as large government debts and looming crashes, can I retire? Can I still retire early, or is it a futile attempt?
Well, that is just a math problem. It's like, what is your retirement number? So, 25 times annual expenses gives you a number, and once you've got that invested in large, massive ETF type funds, then you can pull the pin. And I think we're always on the brink of catastrophe as a world, yet the wheels keep turning. So once again, turn off the news, get on with living your own life. Yeah, that's what I'd say.
And I mean, like I feel this one. I do want to acknowledge that fear too, because like it does feel like a more volatile time ever since COVID, right? But I think it's worth acknowledging, number one, that volatility. But we don't make snap decisions based on where we're going. The high growth investment, and I think you're already ahead of the curve if you're living frugally. That high growth living frugally, 2 thumbs up. Actually, 6 thumbs up from Prashant, Jason, and Ruth. I think the other thing is to focus on flexibility, but not perfection. So making sure that you've got your emergency fund, you're diversified, all of these things that are like just broad contingencies for whatever could happen. Remember, if it's a market crash, it does affect everybody, but just make sure that you can actually get by and you're not all in. And then, yeah, just have I guess, stress test your numbers as well. So if you run projections at like lower returns, at higher inflation, and again, don't bolt when the market turns, because certainly when things like the tariffs kicked in and that had an effect, and then now it's all bounced back. So, I mean, what Ruth says is true. Like the wheels keep turning. It still boggles my mind that it does. Because it does always feel like we're on the precipice of something. But the main thing is just to focus on your flexibility, stress test, and diversify.
Mm. And you can practice. So like if you're living really frugally and you know how much you need to live on that just from your investment income. Just live on that while maintaining your day job or whatever you're doing. Yeah. And then your flexibility thing is so key, Jason, because I find a lot of people, if you're frugal and you're investing the way you are, and then you do decide to retire, you kind of can't keep interesting people down. And so they're not going to just stop and sit on the sofa. They still can't, everybody wants a purpose. So they're all still out there seeking opportunities and the likes of that. So if share markets do go down 30% or something like that, that person is going to be like, well, I'm not going to sit here like a deer in the headlights. I'm going to do something. And so they're going to be, I'm picking up a part-time job, or I'm not going to be selling investments at the moment because I've got a fully stocked emergency fund. That's the whole point of it, etc. So just, yeah, remain flexible and enjoy the ride. Yeah.
Yeah. Okay. All right. We'll accelerate some more questions. One from an anonymous attendee. Sharesight not supporting commodity ETFs such as PM Gold on ASX. Actually, we do support PM Gold. And the reason I know this is that's the best performing part of my portfolio right now. And I track it on Sharesight, and it's actually Gold has done a phenomenal job. On that note, actually, we also just launched support for all precious metals on Sharesight. So that includes gold, silver, palladium, and platinum. It's all of those, even held in physical form, are now supported on Sharesight. So if you want to enter those and just manually enter how much gold you hold, you can track that as part of your portfolio. So yeah, we do support PM Gold and other gold ETFs. Ralph has another question. We have an SMSF and some corporate bonds through FIG. Is there a way we can track our investments in FIG through Sharesight? Not at the moment, Ralph, but we are working on bond support. Like I mentioned, just watch this space. We will definitely announce for Aussie and Kiwi bonds to be supported on Sharesight. Next question from Louise. Do either Sharesight or PocketSmith have intentions to allow to link my NZ Unisaver investment?
I actually don't know the answer to that, so that's something we've got to look into.
Yeah, same here. I don't know on the Sharesight side as well.
I think what they'd have to do, they just have to do it as a manual asset in Sharesight, and they just track it that
That's
way.
right.
Yeah,
Yeah,
yeah.
like a custom investment.
Yeah, custom investment. Thank you.
There are lots of super funds that we get pricing for. They're actually visible in Sharesight. We're trying to actually to showcase how you can actually track specific units of your super. But yeah, we haven't cracked that yet, so we're working on it. Another question, will you be linking Australian Retirement Trust to PocketSmith?
Again, I'm not entirely sure. Although, like is it a super fund?
It is a super fund, yeah.
Yeah, and that's a challenge with open banking right now because we're not, the open banking rails in Australia don't quite cover that yet. But I do know that there's legislation being worked on to actually bring in more of those data feeds. So
Yeah.
the solution for now, and so we are working on it. We're actively talking with a whole bunch of fintechs with the Australian government on making more of that data available to Australians. But in the meantime, you can add that as a manual net worth if it's just a number, or you can upload some transactions. Drop us a line at help, and we can help you out.
Yeah. And similarly on Sharesight, we do have the live pricing for a lot of the unit funds of super. You just have to track them manually. Malcolm asks, is PocketSmith a mobile app only, or can it be used on Linux PC?
PocketSmith has what we like to call big screen energy. So it's better used on a PC or
I love that
a
term.
laptop. So, and we do have a companion app. So yes, if you have a Linux PC, it's going to be great for you.
Yeah.
I use my PocketSmith mostly just on my computer here, but where it is super handy on the app on the phone is if you're downtown out and about to buy something and you're like, how much was in that bank account? You can just very quickly scroll through it and see what's in it. Yeah.
Yeah. It's taken 54 minutes to ask the first AI question here. With the upcoming AI developments and AI agents that can build any spreadsheet or web page you envision, do you think your platforms are becoming irrelevant, especially as younger generations are increasingly able to vibe code and value private, secure data?
I'd love to take that one. I think I don't think we're becoming increasingly irrelevant, but it's worth acknowledging that these tools are out there. We think personal finance tooling isn't a zero-sum game because we've seen that personal finance is so different for everyone. Some people prefer simpler tools, some people will work with their tools from their bank, others will use PocketSmith, and now there's the option to vibe code your own tooling for yourself. So I think that's really good for the community because it makes money management a lot more accessible for people. What we'd caution, though, is that the accuracy of AI. So we're very, very cautious about the ability for AI to produce hallucinations or give you incorrect reporting on your data. And the second part of it is vibe coding a platform is great for small things, but that code base becomes increasingly difficult to maintain as it grows. So there is a limit to what it can do, but certainly AI is moving so quickly, right? So you don't quite know what will happen in the next 6 months to a year again. So
100%. And we can go into this whole rabbit hole of deterministic versus probabilistic outcomes. And you probably want to be more deterministic with your
yes.
money than probabilistic.
Unless you can vibe with your money as well, but they'll horrify Ruth.
I've certainly heard from people who are using data from both of their data that they've got with both of you guys and just asking ChatGPT like scenario A, B, C, and D based on X, Y, and Z, tell me this, and out it spits this lots of useful information for it. So using it that way. I just don't think I want AI looking too deeply into my bank accounts. Like that's my business. So yeah.
But yet, yeah.
Yeah. No, that's phenomenal. Now there's still some unanswered questions. Unfortunately, we are running way more than time. We're actually 10 minutes past what we originally set out for. Happy to go on for one or two more questions, but just any kind of housekeeping stuff so that when people have to drop off, they can they can do so. Hopefully, we've answered most questions. We'll link a bunch of things to a whole lot of questions. Jason, anything housekeeping wise you want to go through? And if you're happy, we can answer a few more questions.
Oh, well, I mean, I think we do have 3 minutes left. I don't want to take up too much airtime. I just want to thank everyone for such incredible engagement. I've not ever seen a Q&A with so much. And, I've been quite happy just jumping in and chatting with you guys as well. If there's anything we don't, and there will be questions we don't get to, please just email us at help@pocksmith.com and we'll get back to you one-to-one. So, and we can help you out with the things that you want to know and also bring you up to speed on things that we're working on. So thank you all.
Yeah, likewise. I did have a slide with the links to all our support functions. So support@sharesight.com, help@pocketsmith.com, and you can always reach Ruth on her website, thehappysaver.com. So all of those are there. And yeah, like Jason said, thank you so much for giving up your time, and huge special thanks to Ruth for jumping in and doing the work you do really day to day. It's phenomenal value and education that you provide. And so many people's lives have been changed as a consequence of
that's pretty cool. Yeah. And it's nice sitting with you two and hearing all these quite technical questions because that's personal finance. Some people are deep into the details, and then some people are more like vibing it with the direction they want to go with their money. But what I do know is true that you can reach out to any of us and the finance community in general, personal finance community in general. There's always somebody happy to answer any question, whether it's little or big. And if I don't know the answer, I'll send it on to somebody who I know can answer it for you. So feel free to reach out to me if I can help.
Yeah, that's awesome. We might just close off with this really big question that I see in the Q&A. How much money is enough? And we'll close with that.
Well, it's obviously unique to every single person. And so how I work out how much money is enough is what do we spend each year? And I times that by 25. And that is the number that I am aiming to have invested into share market assets that will grow in value over time. And what that means is you reverse that out once a year, I can sell off 4 to 5% of that total figure, and that will replace those original annual expenses. So for me, enough is about 1.2 million invested. Yeah, but it's different for everybody.
It
How
is.
about you? How about you?
I mean, like I think like I learned a lot when we were building the company. You know, we're a bootstrapped startup, and we didn't pay ourselves for 4 years. So, you know, I went from earning a decent salary to being broke, along with James, my co-founder. And as a part of the journey, I learned that I was poor, but I wasn't necessarily unhappy. And then I think the answer to that question is, well, what would it take for you to be happy? And what does happiness mean to you? And then from there, when you take a look at your goals and what you want to achieve in life, you take a look at, well, how much money would you need to get to that point? And you might find that it's not heaps. So for me, I mean, I don't have a number in mind. I guess it's just what I do know is that my cost of living hasn't really gone up that much, aside from really travel is the biggest one. As you know, my family gets older, I'm going to see them, but it informs me that I'm pretty happy with my my state of living from when we were working on PocketSmith in the early days to now. And I think that's part of that mindset of living a bit more frugally, is to not have your, what's that word for it, Ruth, when your cost of living goes up with how much you earn. It's
Creep, lifestyle creep. Yeah.
lifestyle creep. That's it.
Mm.
Yep. Just get a grip on that. You know, just revisit what makes you happy and work towards your number.
Oh, wonderful. I don't have anything much more to add to that, really. It's just, yeah, just spend less than what you earn, and
Invest the difference.
that's it.
Absolutely.
Yeah.
All right.
Awesome.
Awesome. It's been
Thank you.
wonderful chatting to you both. And thank you so much to the audience for all the questions. Thanks all, and see you soon.